All right, good morning, everyone. It is 8:17 in the morning of August 12th, 2022, and this is my pre-market strategy session. And so today, the first thing I'm looking at here is the SPY. Yesterday did what you could kind of call is a gap and crap, but there's a little bit of a silver lining to that, and that is that, it opened up higher yesterday. Started the day moving higher, and then it failed. Right, and it sold off for the rest of the day. Just kind of moved downward for the rest of the day. Now, it's not really a bad thing because it didn't fail past the previous day. You know, a real gap in crap would have been for this red candle right here, yesterday's big red candle right here, to have come down and tested the previous day's lows, maybe even have broken below it and closed below it. That would have been really bad. This is a pop higher and then sell off on low volume at that. So yeah, I do expect, for the chart to remain unbroken. I expect the price action to come down here and test this support and resistance line and then move away. I'd rather see that sooner than later. Retest and successful move higher sooner rather than later would be much more bullish. Will it happen? I don't know. Just gotta kind of sit tight. Um, there, there's so much bearish sentiment out there right now that it's easy to take money from the bears. And classically, when things really go downhill, it's in the September and October time frame. So summertime trading tends to be low volume, drift up kind of activity. There's a lot of bad news that's already come out. There's been time for the market to digest it, and you know, that's the way the market works, so the market is not a reflection really of the current economic situation, nor is it really a reflection of the market is the market. It just doesn't make sense a lot. So I would expect a retest here of this bottom, this support and resistance line down here, 1417 roughly, $419 or $416 roughly. And then there's this other sort of long-term top thing happening right here. Definitely like to see it break through that and go higher. That would be a neat thing. I'm sitting on my hands. After the first 2 hours of the trading day, I just get up from my seat. It's summertime. It's really not a time to put on any risk, or do any hedging. It's just time to sit back and watch what happens. So maybe today I'll take a trade. I don't know. We'll see what happens if we get some strong signals here. The upside and downside. So there is a lot more with this move right here being, let's see, let's go from, was that mid-June to, we'll call it mid-August. It's close enough to mid-August. There's a 17% move, on the upside. So that's got bears. I mean, after this move down right here, that sucked in a lot of bears, and they're getting taken for a ride. So actually, let me draw some support here from the closes. I'm going to draw a close from this day here, the close, to the close on, looks like that day right there. Yeah, so chart's getting a little bit crowded with lines, but we'll see what happens there. Okay, I wouldn't be surprised to see, things kind of move up, then pull back, and then up again. That's just me. That's the way I see things. Qs are interesting here. The Qs popped up above this long term. This is the same sort of resistance that's in for the SPY, but the SPY is, a bit more bullish since it's a bit more diversified. The Qs are so heavy with tech. Now the SPY is also heavy with tech, but the SPY has, utilities and miners and all sorts of stuff in it that is much more diversified than the Qs. So yesterday the Qs opened up above this resistance line, and then dropped back down below the previous day's open. That's a bit more negative. It's probably a decent day. Today's probably going to be a decent day to look for shorting opportunities on the Qs. It's just if nothing goes up in a straight line, and so this leg right here from let's say July 26th to today, the past 2 weeks, roughly 3 weeks, a little pullback is in order now. It's actually kind of already occurred, so it's hard to say. It seems a little bit early for the next kind of pullback right here, but it could be looking kind of toppy right there. I'm going to look out. Actually, I'm going to keep my eye on the Qs here today for the first couple of hours and see what they do. The Qs have quite a distance here to the last gap that was unfilled. Let's see. Actually, it looks like this too. This right here too is an unfilled gap. Let's see if it came close enough. Yeah, so 359, 360 almost. There's an unfilled gap at 360. That's I think that's the destination right now for the Qs until summertime wears itself out. VIX yesterday. So the VIX popped up and then dropped back down yesterday. It started out low, went pretty high, and then came back down to close. So the pressure on the VIX is in the downward direction here, and it's broken below kind of the support line. You can't chart the VIX that way, but just kind of eyeball things. That's where the VIX is now. Another leg lower on the VIX would be huge. To get it to close below 20 and confirm. Let's see where it closed at yesterday. Closed just above 20. So anything over 20 on the VIX is, you can pick and choose. It's a stock picker's sort of arena at that point. However, to see it close and then drop back toward 15 or 16 or something like that, watch out. The bulls are on a run if it makes it that far. A lot of noise has been made about the 10-year, 2-year. So it's inverted, and it's really quite deeply inverted here. Now, the trick with this, and let me go back. I think it's best on the monthly. Let me go back a bit. You can kind of see so this is February 2020. Oh boy, that pandemic came in just in time to save the market big time. So you can see here, it's not until the 10-year, 2-year inverted curve yield starts to normalize that we actually get a correction in the market. So there are better examples back here from 2007. So this, and I have it down to the week. I probably should show the week. Let me go to the weekly here real quick and pop back on that again. Here we go. So here, there's a dip down below the yield curve, and then it came back up. And this little spot right in here is actually, there was a tiny bit of negative activity on the market, but then it came back down again and stayed below. And it wasn't until it came back up and decided to stay back up that the market really started to fall off a cliff here in 2007, starting in the week of May 21st, 2007. So you can go back and look at that for yourself. And then also here in January 1st, this is the dot-com bubble. You can see here the yield curve inverted, stayed below for quite some time. I mean, this is, the yield curve can stay inverted. Let's see, that's January of 2000, and then it was January a year later of 2001, where the yield curve started to invert or started to normalize again. And this is when, right in this area here, is when the stock market started to really tank. So there's a lot of noise being made. A lot of people are pointing, actually, let's go back to 90, I think. Yeah, so yield curve really started to normalize here on July 2nd of 1990. And that's this right here is when the 90s crash started to occur right here in this area right here. So a lot of noise is being made about, oh, look, you know, the bond market always gets it right. And the yield curve is inverted and everybody, you know, is chicken little falls, you know, the sky's falling kind of thing. But this condition can remain for a considerable amount of time. I mean, I'm talking 12 to 18 months. This yield curve inversion can continue before it normalizes and the stock market starts to go the other direction. So there's nothing, I mean, there's plenty out there to be bearish about. There's plenty out there to you know, be bearish about. But the Wall Street likes to play its magic tricks and really you know, trap the bears and then run 17% in the, you know, 17% in the opposite direction on the bears. So I have a little bit of a bearish bias on the Qs for today, just because it's starting to look kind of messy up here. But for the next, I don't know, I'd say 2 months or so, I think it's probably going to be best to be bullish. But if I don't have a strong conviction, then I don't have anything really to trade with or against. So you know, you got to either go with your bias or you know, fade your own bias. You know, be contrarian to your own bias. So I don't know. We'll see what happens. Tesla here. Now Tesla's doing something interesting. Looks to me, so I've got this sort of speaker, what do they call this? I don't know, a widening downward range here on Tesla. So it looks to me like Tesla's going to start its next leg to the downside here. This is a lot of selling right in here. A lot of selling days going on right here for Tesla. It'll pop up to the top there and then just red. So I mean, a green day can pop in there, you know, but generally speaking, Tesla is looking really quite bearish. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday morning's strategy session. Have a great weekend, everyone. I am out.